Good afternoon. This is Sean Golding with Golding & Golding. Hoping everyone had a good second half of their tax season. Unfortunately, for some people at this time, it's the time where they realize that they're out of compliance. Maybe they didn't get a chance to file their tax returns by the October 15th deadline, didn't qualify for the December 15th deadline. For some people who get an extension, there are some people in California who have an additional month. But for many people, they have missed the tax filing, foreign account reporting, things of that nature. So why don't we talk through some of the basics of what you can do if you want to file late taxes, FBARs, and other international reporting. Whether you're a U.S. citizen, lawful permanent resident, you meet the substantial presence test, you're a U.S. expat living abroad, let's go through it. So FBAR, foreign bank and financial account reporting. U.S. persons are required to report foreign bank accounts, investment accounts, certain foreign life insurance policies, pensions, pooled funds, etc., on the annual FBAR, otherwise referred to as FinCEN Form 114. It's a form that's separate from your tax return. Typically, it's due at the same time your tax return is filed, but it's on what's referred to as automatic extension. Taxpayers had until October 15th of the year to file. If they didn't file by the 15th, there's no additional extension for the FBAR. Now, when someone misses the FBAR filing, there are various factors to determine which different procedure they may use to get into compliance. Do they also have unreported income? How many foreign accounts do they have? Have they filed FBAR in prior years? This is the first year they're required to file it. Tax filings are a little different. U.S. persons have to file tax returns, whether you live in the U.S., whether you live abroad. Many taxpayers are under the misimpression that if they live overseas or they have only foreign income that's sourced outside of the United States where they already pay tax overseas, they're not required to file a tax return. Of course, that's incorrect. When taxpayers haven't filed tax returns, there's various penalties they can get hit with: failure to file, failure to pay, substantial underpayment when they do pay, things of that nature. In addition to tax filing, there's various international reporting forms that some people have to file. In addition to the FBAR, there's the Foreign Account Tax Compliance Act, which is FATCA Form 8938. There is Form 3520 for foreign gifts and trusts, 3520A, which is for foreign trust ownership by a U.S. person, 5471 foreign corporations, 8621 mutual funds and other PFICs, passive foreign investment companies, and the 8865 for foreign partnerships. For some taxpayers, they may have filed their tax return. It's a mixed bag, right? They may have filed their tax return, they didn't file the FBAR. Or they filed some of their international reporting forms, but they didn't file the tax return, or they didn't include their foreign income on the tax return. It comes in shapes and sizes across the board. But the nice thing is typically there are various safe ways to get into compliance, despite all the nonsense that you'll find online about fear-mongering and going to jail and $500,000 penalties up front for missing an account that a family member may have opened for you, etc., etc. So what happens if you didn't file the FBAR, you didn't file taxes? There's a few different options. For purposes of this presentation, let's assume that there is some foreign accounts, assets, and investments that are required, because if you just didn't file your tax return, you wouldn't typically go through one of the amnesty procedures unless you're willful and you're going to do voluntary disclosure. So if you have some unreported foreign income, assets, accounts, investments, and you have to file late or amend, there's various components to consider. The first thing is should you file? Typically the answer is yes. The IRS requires you to file when you meet the thresholds for filing, and just because you miss some forms doesn't mean that you can't get into compliance. But there are plenty of people who probably don't file. Some of them may not get caught. If the IRS does find you and they think that you were willful or acted fraudulently, it could lead to significant fines and penalties. But again, that's not the fearmonger. There are many people who skate by under the radar and nothing happens. If you're going to get into compliance and you're going to file, typically the big decision, the first step is, are you going to do amnesty, like streamlined procedures, delinquency procedures, reasonable cause, voluntary disclosure, or are you going to risk a quiet disclosure? With a quiet disclosure, you either go back and file prior years without alerting the IRS that you're filing, or you just start filing going forward. The latter is considered an intentional omission of prior years, so that too is considered a quiet disclosure. IRS has said that if they find you doing a quiet disclosure, there could be some serious fines and penalties, of course, understaffed, and who knows what kind of resources they have to allocate toward it. But something to keep in mind, quiet disclosure. If the IRS finds you, it could be a problem. Otherwise, you could do amnesty. And there's various different amnesty programs that you could do, which we'll talk about here. If you're willful, you typically would do the voluntary disclosure program. There used to be a distinction between OVDP and VDP, OVDP for offshore, VDP for domestic, but now it's just kind of all mixed together in VDP. So if you have unreported offshore accounts, investments, and income, and you don't file, and you haven't filed before, and you were willful, or you can't certify under penalty of perjury that you're non-willful, typically VDP is the way to go, because if you get caught doing a streamlined, the IRS has really begun enforcing that, and for the few cases that have been published, those taxpayers have unfortunately ended up incarcerated. For taxpayers who are non-willful, there are various other options available. There's the streamlined procedures, there's delinquency procedures, and then there's reasonable cause. We have a ton of free information available on our main website. And our sub-website, you can always reach out and schedule a reduced fee initial consultation if you think it's appropriate to your matter and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.